All right, what is up, everybody? Welcome back to episode, I believe, 11 of the Roundtable Podcast in the Kingdom Discord. Here it is myself and it is Ryan here. Short attendance tonight for the stage, but we're gonna hold it down here, Ryan. Happy Sunday. We were talking all day yesterday during the trivia. Now we're back here for a Roundtable Podcast to talk stocks, talk to the chat, all that kind of good stuff. So how's it going on a Sunday evening for you?
Doing well, always can't complain about a Sunday. Easy like Sunday morning,
Even though it's like 6 p.m. my time.
Well, it's 3 o'clock for me, but I hear you.
Nice. Yeah, man. I mean, I'm excited for the market to open back up again. We got a nice full week ahead of us. Some crazy data came out last week. We'll talk about data last week. Talk about data this week. We got 4 IPOs in the running this week that we're going to be talking more about. We're going to talk trading strategies, and as always, we're going to be talking to you guys in the chat here. So any kind of questions that our chat has on Discord, make sure that you drop them in the chat in the live trading comment section. And if you have any questions on YouTube, obviously, if you're watching this on YouTube, make sure that you drop it on the comment section on the YouTube video as well. So first thing that we're going to be talking about here is the recent IPOs. As you guys probably might notice, we have 4 IPOs that are all scheduled to go this week. We've got Via Transportation, we've got Gemini, we've got Figure Technologies, and we have Klarna. Why there's no image here, I don't know. Robinhood's broke, so they can't afford the image. I don't really know. But Ryan, how you feeling about these IPOs, man? We got 4 IPOs coming in. How you feeling about these?
Well, I mean, Klarna needs to pay now pay now, buy later or something. I don't know what's going on with their but
yeah, I don't know what
I don't really know Via or Figure Technologies. I know Gemini. They're an okay exchange. Klarna, I know who they are. I've never used them personally, so I don't really have great experience with any of these except for Gemini. But I don't think I'm going to invest in any of them yet.
Okay. I know. So I don't know. So I mean, Jackson AI, welcome in. Ty, welcome in here. Says Klarna disgusts me. Yeah. So basically, Klarna is more of just like that, like a firm buy now, pay later kind of thing, where a lot of people are going to be using buy now, pay laters. And I don't know about what you think, Ryan, about it, but for me, like I'm thinking buy now, pay laters. In a market downturn, I feel like there might be still some potential there because in a market downturn, people still got to pay for their groceries, right? You got to pay for your groceries, still got to pay your bills. So if you can't afford to do it up front, people might be doing those installments of 4 like a firm does or Klarna maybe. I don't know. Maybe Klarna may do well in a market downturn potentially. I don't know what you think about that or not. That kind of idea.
That's a hot take. Joking, but that's an interesting way to think about it. I mean, with these buy now pay laters, are they interest free? Obviously, assuming you make the payment in time, or else otherwise you have to pay interest. That kind of trick.
Yeah, I believe I've used Affirm once or twice in my life. Like I affirmed our vacation I think last year, and it wasn't because I couldn't afford it. It was more of just like if I could pay it off in 4, and if I could pay it off with no interest, then why not?
Yeah,
So
exactly.
I used it because it was 4 free interest free payments. So if I could spread out my money that way, then use the money that I didn't spend up front to like invest into stocks, into whatever, maybe we'll do it in that case. But I mean, I don't know about Klarna, but I know Affirm usually does like 4 installments that are interest free.
Gotcha.
And they probably make a lot of their money from people who can't afford their payments, usually more or less they get those interest fees that come in afterwards. So
right.
The thing is though, is that I just worry about it being too saturated. I feel like it's too saturated maybe now. Affirm, Klarna. Yeah, I don't know what you think about that.
I feel like Affirm and Klarna are kind of the only options currently. I think there might be one more. Can't think of it off the top of my head. They're not a public company though. I think that I know. My mom's friend has like these 2 daughters who are probably like early college or younger, and like her daughter used Affirm or Klarna like all the time because it was like, oh, it's interest free, and then she got a credit card and was just making minimum balance payments because she's like, oh, it's the same thing as Klarna and Affirm. It's like, no. So I think my point is I think the younger generations do use it, not younger than us.
Yeah.
I would rather use a credit card, get my cash back, and pay it off in full, unless it's a big expense. Then maybe I'll think about like what you did for your trip there. Like, why not?
Right. Yeah, I think it's interesting because I mean, obviously, like I don't think buy now pay laters are gonna go anywhere anytime soon. I think people are always gonna be using them no matter what. People have credit cards, right? So it's basically almost like a credit card, just and for installment payments instead. So Atai says there's just huge compared to the smaller business, which is definitely true. Jay Loco, welcome in, says Klarna is like a wallet. It allows you to track purchases. That's pretty interesting. I didn't know that actually. I've never actually used Klarna. I've only used Affirm, and Affirm is actually really easy to use. All you do is you hit, yep, I want to do this in 4 installments. Boom, 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 and you're good to go. So they make it really, really easy to do. I feel like these buy now pay laters won't go anywhere anytime soon. Now, I just wonder if there's going to be hype at the IPO time, or is it going to be one of these like at some point, and maybe you can give me your opinion too, Ryan, but at some point with these IPOs, there's going to be a flip. It's going to flip somehow. It's going to be an inflection point where right now everybody's buying IPOs because they pop up 50, 100% first day, first week, whatever. They sell off, make a profit. There's got to be a point where they're going to open and they're going to be down the exact same percent. I feel like people are going to be tired of this kind of thing and they're not going to do it. And then when everybody starts trying to, flip it for 100%, everybody starts selling off. We're down, 15, 20% the first day. I don't know when that's going to be, but I feel like the IPO hype is here right now.
Yeah, I think to your point, I think I saw something about how IPOs are like back in vogue basically, but I think you're right. There's going to be a point where not every IPO is going to fly up right at IPO.
Yeah, I mean, if you take a look, like Bullish, for example, Bullish was up over 300%. Now it's only up or was it maybe it was 200%, I think, because it went from 37 to 118, and now it's back down to $50. So Bullish, that one came down really, really quick. That one pumped up here, and then it got pulled down so quick. It's almost basically at IPO price where it was at. So I'm wondering if people are starting to take note of that, and they're worried about that happening with with the Via Transportation, with Gemini, with Figure, with Klarna, with these 4 coming in. How much can this hype be here until we get a flip and it's an inflection point, and then we get rug pulled the first day?
Yeah, I think that's why I don't want to invest in any of these. Is that exactly what you're talking about? And that's why I'm skeptical on IPOs. Period. Is exactly that.
I think it's one of those things where with IPOs, like for example, I'm gonna put money into one of these IPOs when it goes out. Okay, and I'll tell you that right now. And the reason why is because I'm gonna put money into the IPO. I'm not gonna put a bunch of money into it, but put a little bit of money into one of these IPOs here. And then, if it gets rug pulled, then I'll buy a little bit more and average down. If it's a company that I like and I think it's gonna do good long term, I don't mind trying to get into the hype of the IPO pump the first day it's released, right? So I wouldn't mind that. And if it gets pulled down, then I can just buy in for a little bit cheaper. That's kind of how I'm looking at it right now, I feel like, in this kind of thing. But I'm not trying to buy into all 4 of these, I don't think at all.
Yeah, I feel you there.
So Ty says that I think the biggest issue for it is consumer spending in the U.S. has fallen off a cliff since 2005. It's the smallest percentage of GDP now in decades. Yeah, that is 100% true. But I mean, yes, the consumer spending and everything else has definitely come down in 2025 because people are getting laid off. The labor market sucks. They're trying to hold more cash, trying to save up more money for those bills and stuff like that. But if we keep having this downturn here, people still got to pay for bills. And if you think about it in this way, this is kind of where I feel like maybe the Klarna and the Affirms are different than credit cards. Ryan said, yeah, you get the cash back and credit and you get those points and stuff like that for credit cards. But if you could do 4 installments of Klarna or 4 installments of Affirm, for example, that was my 4 installments were over 2 months. So if I got laid off tomorrow, then if I affirmed, my groceries for whatever the case is or whatever the reason is behind it, that gives me 2 months to essentially hopefully get a new job to then be able to pay back my grocery bill. I don't know if that makes any sense or not, but Ryan, does that make sense about how I'm kind of looking at it a little bit?
I think so. I mean, I hear you with maybe you don't have steady income. I mean, the thing I don't like about those buy now pay laters, and I don't know if um a Klarna and Affirm do this, but I've used it before, and they set your final payment beyond the auto pay is after the due date, so that they can charge me interest if I'm not paying attention. I don't love that.
Oh, interesting. I didn't know this.
I don't know.
I
I
didn't
don't
see
know
that
if
because
Klarna and
yeah.
Affirm might be better. I can't remember what I paid off, and it wasn't through Klarna and Affirm. I did it, and it was like, oh yeah, their last payment, was due. If I pay by the 18th, I'm fine. But the last payment they were going to auto schedule for the 19th, and it was like, oh well, then I gotta manually pay this last payment.
Yeah.
But
So I mean, I just wonder, like, is there going to be a lot of hype on this IPO, or are we going to get pulled out from underneath it, first day? And then, maybe it does good long term, maybe because I know a firm had their earnings recently and a firm killed it. And they're up like, they were up like 10% at one point after their earnings. So, people are still affirming stuff and people are still using it. And again, it's one of those things where, the difference between credit cards and a firm, for example, is, you have four installment payments without interest compared to credit cards where you do the minimum monthly payment and then you got to pay the interest on top of that. Maybe that's why maybe people go to those buy now, pay laters a little bit later on. I don't really know.
yeah, I think yeah, I think your logic makes sense. Then, like I said, I think like younger kids might use it because they don't have a credit card, and they're like, well, I can pay it off in time, and
Right.
I just don't
Do
love
we
the
know?
the predatory tactic. That's all. But
Yeah.
if they
Do we
don't
know if
do it, then it's not a big deal. Go ahead.
Do we know if you pay off in full your firm and your Klarna, does that have any kind of positive impact to your FICO score? Does anybody know that?
That is a good question. Yeah, I don't know if anyone knows. I don't know that. I would imagine
Yeah.
it could, but also I could see if it not because it's not really a credit bureau or not like a credit reporting agency
Right.
necessarily.
Right. I'm just thinking of it like, it's almost like a credit card almost in a way. It's not actually a credit card considered, but you're paying it off in installments. You're taking out basically a loan. Like they're basically
Yeah,
loaning you money, you
it's
pay them
loading
back
for
essentially.
sure. Yeah,
So I mean, I could probably Google if I wanted to, but I just don't know if anybody else knows that or not. But
we got
maybe it
people
could not
typing.
be bad for people that maybe don't know that. A firm doesn't report as far as I know. Okay,
Yeah,
good to know. I was just always curious to know about that one. So the next one we up that's on the
in
list here. So
Canada it
Klarna is one of
does.
those.
Go ahead though.
Oh, interesting. No, it's awesome. So next one up that I know people talk about. So Klarna was a huge one, and then Gemini is a huge one as well. People are talking about. I am not bullish at all on Gemini. I think Gemini decided to go public. Also, before we go back to Gemini, also I don't know if you knew this, but Klarna was supposed to go IPO earlier this year, and then they pulled out because of the tariffs in April from the Trump administration. Didn't know if you knew that or not.
They pulled out because of Trump.
Yeah, they pulled out because of tariff uncertainty. Because if the markets are
Oh,
crashing because of inflation running away and stuff like that, then no one's going to buy into their IPOs. They're just going to sell everything they can and pull out and go into cash. So I think a lot of
I did
companies,
not know
like
that.
towards the beginning of the year, a lot of companies like delayed their IPOs because of that uncertainty with inflation and tariffs and stuff like that. I think now we're at a point where they're just like, yeah, whatever. Like tariffs, I mean, it's like a thing in the past now. No one's really talking about it anymore. Markets don't move that much with it. So I think that's why they're starting to go public again with these IPOs.
Yes, for now it's not a problem. But yeah, for now,
Right.
we don't know.
Yeah. The Ty says so now there's a bunch of IPOs at once because of the period. I think so, Ty. I think a lot of people are going public. Here's what I think.
It makes
I
sense. Yeah,
think I think these companies are seeing that like you have Circle who did like 200%. You had Figma did like 100%. You had Bullish do like 100%.
Reddit,
Um,
huge.
Reddit Reddit was huge. I think it was that last year. I think it was that pumped out. I believe something
Yeah,
like
you're
that.
right.
I think these companies are starting to see the IPO hype and they're trying to take advantage of these IPOs hypes in this case. I think, and that's kind of what they're doing in this case. That's why I think Klarna went public. I also think Klarna went public because now the tariffs have kind of cooled off a little bit at least, so they went public. I think Gemini went public only because of crypto hype. I think that's what it is. I think there's so much hype behind crypto right now because of the Trump administration. They had their new coin come out recently, I guess, that was supposed to come on the market or whatever. I don't know what it was.
Right.
But I think all the new things being passed. I think you had the Circle IPO do very well. You had Bullish IPO do well until it got came back afterwards. I think Gemini is going public because they want to try to get advantage of the crypto right now. Bitcoin keeps
Yeah.
pumping up. I know it pulled back a little bit recently, but there's a lot of hype behind cryptos, behind
Coinbase.
XRPs, behind all those things.
I mean,
Yep.
Coinbase
What
was
about
40
Coinbase?
bucks 2 years ago. I mean, so or
Mm,
less than 2 years ago. So
yeah, so I really think that like they're trying to take advantage of the crypto hype now. I just really don't believe in Gemini at all. If you look at like how their finances look from last year to the year before, or this year to last year, they're burning cash a lot more than last year. They had like a net loss of like 40 million or something like that last year, and the same time this year, it's now like 280 million dollars in loss. So I don't know what that reasoning is behind it. I think they're not even a profitable company yet. And that's why I don't want to. I wouldn't want to go into an IPO that's not profitable yet, if that makes sense. Because I don't know why I would.
Hey, but you got leaps in Snapchat, so
Yeah, dude. Let me tell you though. Right? Okay. The leap. Valid. The leaps with Snapchat though, I think are a little bit different because
I'm just joking.
I know. I see students in my classes every day using Snapchat or like, in the hallways, whatever, because they can't use phones anymore in classes, right?
Right.
So I see that their user base is still growing. They just, for some reason, cannot figure out a way to make it profitable, and I just can't figure out why. So if they can somehow flip it on their head, then great. But I mean, I'm still, like they usually come down to like $7 or so, and that's
Yeah.
where they're at right now. So
The unfortunate thing is, I mean, you got a good time. I bought a leap on them a while ago, and it's going to expire in January. But it was more of a TikTok play to see if TikTok got banned, or they could jump up.
yeah, yeah,
But it was such a cheap company. It's very small, so it was like no big deal.
yeah.
But to your point, I don't love investing in companies that are not profitable. It's not a great sign.
Right. And so like I know Klarna. So Klarna, people are thinking it's a good investment because Klarna actually, I believe, recently went positive from last year this year. I believe
Gotcha.
Klarna flipped from net negative to net positive. I believe. I think it was either like this year or maybe end of last year. So Klarna flipped to being a profitable company, which is why I think there's a lot of hype behind it. Gemini is still not profitable at all. So I wouldn't touch this one with a 10-foot pole because they're burning cash. It's crypto, sure, but like they had lawsuits.
Yeah.
Why would I go to Gemini? Like just go to Coinbase. What's the difference? That's why I look at it.
Yeah, like I told you before we started here, is they really provide a service for people in New York more than like because people in New York can't use Coinbase; they have to use Gemini. So, but
Right.
I don't. Their fees aren't as good. There's like lots of things. The reason I don't love Gemini, and then all that you
Yeah.
stated too.
Right. Yeah. So I mean, that's why like for me, Gemini I'm staying away from for now. Figure
That
Technologies. Figure is a really, really interesting IPO coming out. They also just flipped from net negative to net positive. I want to say it was either this year, or maybe last year. They've had a huge growth in their company recently. Their CEO, I think it's CEO, was the ex-executive of SoFi. I didn't know if you knew that or not, but really, really interesting
no,
stuff there
I don't
as
even know
well.
what Figure Technologies is.
So Figure is more of like into the lending space. They started off doing HELOCs, so home equity line of credits, and mortgages and that kind
Oh,
of
so
stuff, and that
that
kind
makes
of like
sense.
lending
That's the
thing.
SoFi guy then. Okay, go ahead.
Yeah. And you read into the company, and it's like it kind of lines up with what SoFi basically does. They can do consolidations and personal loans like SoFi can do. They
Gotcha.
want to use blockchain technology to use that for using that for in terms of transactions and stuff like that for lending and stuff like that. So they want to use blockchain for, which I think is really, really cool. Because I don't think any company is really doing that with using blockchain for like HELOCs and that kind of stuff, which I think is pretty interesting as well.
Yeah.
And then
Let's
after that, so you read into it, they've recently increased their lending for HELOCs from $400,000 houses to $750,000 houses. So
okay.
they're expanding their clientele to the more wealthy individuals to get HELOCs and that kind of stuff. And so they get so those more expensive people, the more wealthy people, I should say, can get those home equity line of credits, use that money to buy another property or whatever the case is, that kind of stuff. And they're going to be
Right.
using like AI to like work with their customer clientele and stuff like that. So I think it's a good play. Honestly, I'm actually bullish on Figure right now, and it's only going to be good looking at it right now, 18 to $20 a share. Throw a couple bucks in there, why not?
Yeah, why not? Why not? If you're feeling good about it, why not?
Yeah, Rock said SoFi is in the entertainment. Yeah, I first remember learning about
It's
SoFi when I saw it advertised in
but
LA for the Ram Stadium.
I mean, I hear what Rock's saying, but like just because you have a stadium doesn't mean that you're an entertainment industry, in my opinion. But that's just me. That's just me. I mean, there was Staples Center. Are they in the entertainment industry? Staples doesn't really exist anymore.
Yeah, that's actually a
There's
good
a
point. I don't really
there's
know
a
what happened.
crypto.com, or no, there was a FTX
Yeah,
stadium in Florida, was there not? I mean, let's just say that. So
Yeah, what happened with FTX, right?
yeah, not good things. But
Yeah, so but yes, Figure Technologies, they're adapting, they're using stable coins and blockchain technology. I think is amazing. Crypto is the new hype for things and doing these kind of transactions. Imagine doing transactions instantaneous for those kind of things, instead of doing wire funds and wire transfers and that kind of stuff. Um, and then using AI software to help work with clientele. Those are going to have an intellectual, like educational platform section where you're going to be able to like help people with consolidating loans and how to help them pay down their debts and that kind of stuff. So
gotcha.
very, very cool stuff, I think, in my opinion. I think it's got some potential for sure out of all these. The fact that it's gone from net negative, net positive, that to me means that they're growing at a pretty good rate here. Is it going to be, like a 10x company? That I can't tell you, but I could see there being some hype around Figure Technologies for sure. Especially with now I think about it, if we get interest rate cuts coming in September, I mean those HELOCs might be looking pretty tasty because you get a little bit of a cheaper rate for
That's true.
borrowing.
That's true.
So Figure's the one that I'm bullish on. That's the only one I'm bullish on right now. Klarna is like hit or miss for me. Gemini is like stay the F away from. And then Via Transportation, the last one. Via Transportation, this one, they do a lot of transportation between like major cities like London, New York. And they actually have a lot of government contracts, I believe, as well. 90% of
Hmm,
their revenue comes in from these government contracts, believe it or not.
interesting.
So,
Interesting.
yeah, and unfortunately, right now these guys are still at a loss in terms of profitability. They're not a profitable company just yet. But over the last couple of years, they have narrowed the gap of their losses. So I think they lost like 100 something million. Like I was like 130 million like 2 years ago, and last year was like 90 million. So they're starting to kind of cut away at that gap of losing money. So this would be one where there's potential to it. I feel like with transportation and stuff like that. I just think this would be on my watch list to see what they do over the next couple months, maybe years, and if they become profitable, it's great. But I would stay
There you
away
go.
from it only for the initial IPO for now. But then I made a thought about, man, I wonder if this could replace Uber or Lyft in the future because they're trying to make transportation with AI software and stuff like that more easily to use and more, and less confusion and having these huge buses. Now it's more of like shuttle services and that kind of stuff. So don't know if it could replace Uber and Lyft. I don't really know about that much, but I mean, I started kind of thinking about like, is it going to be a cheaper way instead of Ubering or Lyfting in the future? I don't really know, but that's kind of my analysis on them.
Is there autonomous driving too or no?
From what I read on their website, I didn't see anything like that. But I think maybe in the future they could do it that way. But it's more of just like trying to make public transportation a lot less confusing, a lot less congested, and then still keeping like a cheaper price is what I'm getting from it.
Gotcha. Gotcha.
That's kind of what I'm looking at. But I mean, I don't really know that much. I only read a little bit about Via Transportation, and again, $40 to $44. I'll tell you right now, I would much rather buy 2 shares of Figure instead of 1 share of Via. I'll tell you that right now.
Right, right,
I would
right.
100% do it that way. So those are the IPOs there. I don't know if anybody in the chat has any kind of thoughts or any kind of questions about these IPOs here. That's kind of where I'm at right now and how I'm feeling about these IPOs. This sucks that they're all coming out at once because like for example, and I don't know if this makes sense, but like some people who would want to buy into Klarna this week may want to hop into Gemini instead. So it takes money away from Klarna to then go into
Right.
Gemini and vice versa. Like it's like almost like a fighting battle over these. I feel like, which kind of sucks. Unlike Bullish, Bullish was the only IPO the week it came out, so there was a lot of hype behind that one.
Right, right.
Circle, same thing. Figma, same thing. But now you have multiple people fighting for that kind of ground. I don't know how it's going to do this week.
Yeah, it doesn't help. It's like if you have your album release with Beyonce the same week, you might change the date or whatever. Same thing. I get you.
Yeah, so I would be curious. I also would be curious to see what they close at for prices for IPOs because these prices can change for shares. So I'd be curious to see about that. McLaren says, "Did you talk about Hood joining S&P? Not yet, but we definitely can since you
Yeah,
asked."
we can. I mean, who cares? But yeah, we can. I'm
So we
just
had what
joking.
3 companies? I think it was 3 companies that joined. It was Hood, AppLovin, and I forgot the third one. I talked
I
about it before,
forgot.
but I
It's
forgot it.
like Ever or something. That's can't remember what it
And
is.
I don't know. See,
It's
someone
an
will tell you the
E.
same.
It's something E. I don't know.
Yeah.
People have been
So
edging. If people have been edging for them to join the S&P with Hood, so people finally got their release.
yep.
Um,
I can tell you. I looked it up earlier.
do they deserve it? Who knows?
M Core. It's M Core. M Core is the one that
M-Core.
M Core is the one that did it. So here's my oh, hang on a second. So we had what? We had Hood. Hood had a big pump afterwards, as we know.
Yes.
Because getting to the S&P 500 is a huge deal, right? It's not just like anybody gets into the S&P 500 kind of thing. But Hood had a huge rally after that.
Yes, of course.
Because yeah, and in case you guys aren't aware as to why the rallies happen, the idea behind it is short and sweet. Is hedge fund managers, all index funds now need to buy shares to be able to have that access to their clientele. So they're gonna be buying up shares of Robinhood, buying up shares of AppLovin, buying up shares of MCore, just so that way they can make sure they have the shares available as part of their funds and stuff like that. So that's basically so like VOO, SPY,
Right.
they have to have allocation in Robinhood markets and in AppLovin, so they got to buy up shares. That's why
Right.
there's a huge pump after hours for it usually.
Makes sense. I thought it was just a matter of gives them like legitimacy or like yeah, people like, oh well now it's an
Yeah.
S&P 500, but no, of course you're right. All these ETFs that are mirroring
Yep.
have to buy the shares.
Yeah, VOO, SPY, and again, think about it, majority of people that are investing money are investing in index funds, right? So there's a lot of volume that's coming in for that one. So these managers have to have those shares. They gotta have those shares. All right, cool. You gotta have those shares. All right, we gotta buy them up to be able to have them to show them for your clientele. So you gotta readjust their positioning as a result. So it makes a lot of sense. But that's why these pumps
Yes.
usually happen after hours. Do you know what companies are leaving? One company that's leaving that's being kicked out is Enphase, believe it or not. Enphase is kicked
Excellent.
out.
Excellent. I have a bearish play on them that might actually work out well. So great.
Yeah, we'll see. You can see had a little bit of a sell off here, about 2% after hours from Enphase.
Bummer for
Um,
Enphase. I actually have I have solar at my house and use Enphase products. But too bad for them. And Caesars is leaving, really.
Caesars is leaving. Yep, Caesars is leaving. I forgot the third one. Third one's one I don't really know much about. Caesars is out and Enphase is out. So if you're bullish on those ones, I wouldn't be bullish anymore because of being taken out of the S&P 500, which means less allocation in these big funds. So probably wouldn't get into those anytime soon.
I mean, Caesars is not going anywhere. I don't think Enphase
True.
is going anywhere, anyways. But Enphase is out, Itai. But go ahead. What were you gonna say, Fridge?
Yeah, and phases out. And I would say, I mean, Caesars, obviously is going to be around for a while because it's casinos and they always make money, right? Enphase, I think, has just so what's in other than Hood and App? It's Hood, App, and
M
M
Core.
Core.
Yeah, there, you just missed it. Yeah.
There you go. EME. Yep, M Core. M Core is in after hours. You get that big spike up after hours here. But the thing is with M Core, they're not really a really popular company. Their volume is like nothing. Look at the volume, 300,000. That's nothing. So, they're just kind of there. I feel like, in my opinion.
Well, it's like
But I don't
construction
know
and
what they
stuff.
do.
So
Yeah, I was saying, I don't know if they even did. Never even heard of these guys. Oh, they're in Connecticut. That's where I live. How cool is that? Well, I have no
there
idea who
you
these
go.
guys are.
Well, you can go hang out with Anthony J.
I'm
Guzzi
gonna go hang
if
out.
you
I'm gonna
want
go hang
to.
out their facility now.
Yeah, there you go.
So the thing that sucks with like Enphase, right? If you take a look at like how Enphase was doing, they've just gotten like slaughtered
Oh, they've been
because of,
destroyed. Go to the
because
5 year, dude. I mean, they go ahead though.
yeah, no. Well, I think the problem with
Yeah.
Enphase is these kind of plays get destroyed because of the administration. The administration has
Right.
taken these guys out
I
because
mean,
they're all about nuclear energy, not reusable, not solar, none of that
right,
stuff.
right, right.
EV vehicles tax are not there anymore. So like that's what sucks about Enphase is that this administration has just been brutal to them.
Yeah,
So
right.
ever
Because
since it came down even beforehand, but like ever since
came down
November,
before.
yeah, it came down
Yeah,
before, but I think it's a problem, you
yeah.
know.
Just because of they're not having solar incentives, so that doesn't help any of the solar companies. Um,
Yeah. So, I wouldn't be surprised. This thing comes back down to like $20 a share. I wouldn't doubt it. I mean, he's already down at like the lowest of the low is down 31 bucks. And that was right after they announced the bill. The big, beautiful bill had talk about getting rid of the solar and stuff like that and getting rid of them by 2027 or 2028, I believe. And they just kind of cut that out. And Enphase is like, oh, okay,
it's
bye, sold off.
it's funny because Enphase got beaten up the most. I mean, there's like First Solar that I think is doing all right, and I don't know about Run. Run's a cheap one, but First Solar is a bigger one. I think is doing fine. So I don't know what's going
Yeah.
on with Enphase.
Yeah, it could be. I mean, their PE compared to Enphase. Enphase's PE was like 30 something. Their PE is a lot lower. So maybe
Mm,
people are flocking to that because it's more of a
maybe,
better
maybe First Solar.
play in that case.
Didn't know they were in Tempe.
Yeah. And what was the other one? Run?
Yeah, Run. That's a cheap one though.
Sunrun? Yeah.
Not Thorchain. Oh, geez. I remember this when this was very cheap. So yeah, it's gone up a little bit.
Yeah.
It's actually down $28 over the past 5 years. But
Yeah.
um,
So I mean,
yeah.
kind of sucks, but yeah. So Robinhood being in is great, for the company. I think honestly, I mean, me and Ryan were talking about this before, and like, Robinhood's come a long way. It's a platform where I thought about transferring money out and not being here anymore, but the products they're innovating here, the customer support they've increased, like all these different things. They've done a really good job, I must say. Like, they've done a lot of good things implementing in more stuff, so I'm not surprised. I know Robinhood was snubbed back in like June for S&P 500, but now it's actually in there. So, but the thing to keep in mind about with Robinhood, and this is something that's very very important to keep in mind about, Block was added to the S&P in July, I believe, and so that was that huge spike right here. You get this huge spike up in Block, and
Hmm.
it didn't last long. Now it's
Yeah,
been stagnant ever since.
it's been pretty flat.
So something to keep in mind about is that this rally that you might get with Robinhood, it could be very short lived. It could stall out afterwards. It could continue to run up, but keep in mind that this rally is not going to. It could not go for a long time. Again, Block rallied
Block.
up after being added and did nothing.
I
So
mean, Block. To be fair with Block, it's been pretty sideways for a while because I used to trade it a little more often.
mhm.
And not terribly, I guess, but like I mean, that time frame here in the I don't know what the time frame is in the middle here. I mean, it's pretty sideways.
Yeah,
Oh yeah, you look at it went down, and then after
yeah,
it's gone down, it's
from
been
like
pretty sideways.
2022 to like from like here to here.
So
Yeah,
whereas Hood,
I
if
can
we
see
looked
that.
at the 5 year chart, I mean, it's up, down, and then pretty up. But you're right.
Yeah,
I mean,
Hood is
just because you're
cool.
added to the S&P 500 does not mean that you're going to be forever a high stock. Oh, okay, never mind. They've blown past. I thought they were like 100 in their IPO or something.
I think they IPO'd like 40, and then they went up to like 70. Yeah, 38, and then went to like 70 ish. But it doesn't show it on here because that's probably where it closed at. But it pumped as high as like 70, then it kind of came back out. Oh, maybe. Oh, I was thinking about this pump here. Maybe is what I'm talking about. $70 was this pump right here that we had.
Oh well.
But yeah, I mean, I think it's one of those things where it's like, is the hype going to continue with Robinhood? I don't really quite honestly know. It could do well, honestly. Who knows? But it could also be this could be a chance that people start taking profits, maybe, or whatever the case is, because a lot of people may have had those covered calls and now they got exercise on those covered calls. It seems
Right.
like I know someone said that in here as well.
Yeah,
So
people are.
who knows what's going to be happening, but it might stall out for a little while here for Robinhood Markets. Who really honestly knows? But it's good for them. AppLovin, same thing. AppLovin's been doing has been on a tear.
Yeah.
I always have a vendetta against AppLovin. I always have been because of Robinhood's trivia last year. But AppLovin's been on like an absolute monster, like up 500% almost in the last year. It's
Yeah.
crazy.
Yeah.
So
Pretty wild.
yeah, but they're a company who doesn't really have to do anything with tariffs because it's all digital advertising and marketing.
Right.
They don't need to
Right.
do anything with tariffs on that one. So they do.
Yes.
They're gonna be fine no matter what.
They're not very limited in their um like everyone has these silly mobile ads now too. So
Yeah. Yeah, for sure. So, good for them, obviously. Sucks for Enphase, sucks for Seizures. The other company, I forgot about what it was already, but sucks for them too, obviously. But, it's always going to happen. They always rebalance their portfolios. So if you're investing into stuff, instead of investing in individual stocks, if you had investments individually into Enphase, the index funds are better because now Enphase is out. You get now shares of Robinhood instead of Enphase. It's a nice trade-off. So,
right.
index funds definitely aren't a bad way to go. So what else
Definitely a
we
good
talked about
set it
that,
and forget it.
right? Yeah, definitely good set and forget it. Talk about economic calendar this week. Because again, it's a huge thing. Now we're talking about the week upcoming here, seeing how Robinhood's going to do with all that kind of stuff, transitioning into economic calendars. A couple big things coming out this week. In the economic calendar, we have PPI data on Wednesday, which is a very, very important thing. In case you guys are not familiar with PPI data, That is your producer price index, basically what the people, what the companies are producing, how much they're spending, and to see how they do,
And that's
which
Wednesday.
is very important because usually what will happen is PPI, what comes first in PPI, usually shows up in CPI later on, because if the producers are paying more, usually CPI comes out afterwards with the consumers having to pay more as a result. So usually the PPI is a good prediction for the CPI, usually, because of that. So,
Noise.
yeah, so we have PPI coming in month over month. I'm gonna say it like 5 times over again. I feel like, but we had a crazy, we had a crazy release here of this is what's happening here. Like, look at this. They were looking at a 0.2 month over month change and then how much they're producing and how much they're spending basically comes in at 0.9. That's a huge miss. That's bad.
Yeah.
Um,
And
because because now they're paying a lot more for their products because it came in a lot bigger.
and the three bowls, is that just like 3 out of 3 is the importance of the data? Is that what that
Mhm.
is? Okay.
Yep, exactly. Yeah, it's almost like some people say that it's the red folder. So some people that watch they say red folder days. This is basically like a red folder version. It's a 3 bowl, which just means like it's a huge catalyst. High volatility is expected here from Bloomberg.
And
So it's very, very important.
what would you say is higher volatility, PPI or CPI?
CPI for sure, I think.
Okay.
I would definitely say CPI because CPI usually because PPI, I mean, if because the way I look at it is this, right? With the producers and everything like that, they have the ability to absorb some of the prices. They have the ability to absorb those prices more because they're the ones that price out what their products going to be worth and their services are. PPI, the producers can absorb that price to an extent.
Gotcha.
So even though, it comes in at 0.9%, as in they're paying that much more month over month, 0.9% month over month, they could absorb even like 0.5 or 0.6 of that maybe if they can. They try to absorb as much as they possibly can. When it gets to the CPI, it's like it's too late. There's no absorbing in CPI. It's the people get what the people are paying, and that's it.
Gotcha.
So that's kind of how I view it. And like CPI is definitely a lot more important in that case, because it's too late. You can't offload anything more. If it gets to the consumer, that's as far as it goes. Like you can't
Gotcha.
give it to somebody else.
Yeah, no
PPI
one's
you can.
exactly. Yeah, yeah, yeah. Okay.
Yeah. So having it coming in at 0.9 last month is actually wild. Like it went from zero, like basically they didn't pay anything month over month to now almost 1% more. So who knows, and that's also, why I take a look at CPI data. CPI came in a little bit higher than the month before because of it, but usually this number, let me see, they're looking at forecasting 0.3. I wouldn't be shocked because here's how I'm looking at it. PPI came in on the 14th last month, and CPI came in on the 12th. This usually is your leading predictor for the next CPI coming out, which is going to be
Gotcha.
September's this
Gotcha.
week. So the fact that, and this is just how I'm looking at it, the fact that this number for August came in at 0.9, way higher than the forecast, I wouldn't be shocked if this comes in, the next one comes in like 0.4 or 0.5. I
Things
wouldn't
coming
be
up.
surprised. Yeah, because if the producers take on 0.9 of it, they might absorb 0.6% month over month and give 0.3 to somebody else. They might offset the prices somehow, right? So
Gotcha.
so I'm a little worried. That's why people are saying they're focused really on that CPI one because this coming in, I mean, you can kind of see how it's starting to kind of have a little bit of an uptrend here. 0.1, 0.2, 0.3 comes in at 0.4, 0.5. That's a little bit of a problem and saying that inflation's getting carried away a little bit. So, very, very important on Thursday to talk about CPI data and what it comes out to be. And then is there anything else? Michigan consumer is always important.
So
These are always good to watch too. Yep, go ahead.
do you feel like likely, I mean, I know what you're saying, like it's going to go up higher, so most likely it's going to be it's going to be probably a bearish reaction to that.
I can't. I mean, I'm not gonna say like 100% confidence on that one,
You need
but
to tell me.
I have a I have a fear of CPI coming in higher because PPI was higher last month by 0.9.
Got you. Got you. I'm
That's what my fear is right now.
just thinking about doing something to play into that on Wednesday or Thursday. That's the reason why I'm asking you.
Yeah. I mean, but then again, like you never know because if you take a look at the charts we had, the
Oh, it'd be a
awful,
be a flyer.
we
It
had
wouldn't be.
awful unemployment, we had awful jobs data, right? And the
Well,
market was like, "Oh, we love it," and then it came back down to reality. But like this
right,
was
right, right.
wild. Like I saw this and I was like, "How?" Like the jobs data was atrocious, and
Yeah,
SPY was up, 0.5% market open. I was like, "What are you talking about? Up
yeah,
0.5%?
very quick.
Are you out of your mind? This jobs data was awful." Then it kind of pulled it back down. It was like, "Okay, yeah, it's actually really bad," So
Right.
um, that's one of those things where it's like I worry that like is the market going to fake you out the morning of with CPI data coming out? I just wouldn't be shocked if this comes in at like 0.4. I could see it being that.
Okay.
Um,
Yeah.
and also
Don't
other
worry.
things to look at.
If I do something, I'm
Job
not going to blame you for it. Don't worry.
Yeah, and also, continuing jobs data is also really important as well, because the big fear that we have right now is jobs data, right? That's the big one. If you're looking at jobs data versus inflation's at like 3% or something like that, or whatever it is. That's more manageable than the labor market just like kind of like just crap in the bed right now. So that's why the rate cuts are coming, even though inflation is still higher than it should be. Before we do rate cuts, they're trying to now see if they can stimulate somewhat a last-ditch effort to stimulate the economy with rate cuts because the labor market is doing awful.
Right,
That's the big problem we're having right
right,
now.
right.
So, I mean, looking at jobs data is important. CPI is important. Seeing what the Michigan consumers talk about is also very important. I know it's like underrated, but a lot of people look at this as well and saying, "Oh, like look at this. Like the consumer sentiment just basically means how good they feel. Has this been on a decline? Like you looking. I mean, it's kind of bumped up a little bit, thankfully. But we had like this we had really high numbers end of last year, and then boom, tariffs hit. Oh my God, everybody like hates the market now with a passion. So. I mean, those are things to also keep in mind about the Michigan consumer reports are very, very important too, in my opinion, to look at
And this
for
comes out.
sure.
What day does this come out? The Friday. Okay.
Yeah, this comes out Friday. So, yeah, and McLaren says GME earnings Tuesday after close, biggest market mover. Maybe, yeah. I mean, we can take a
He's
look
being
at GME and how
sarcastic,
it's
or
doing.
they are being
I know.
sarcastic. Okay.
Yeah, no, 100%. I mean, what
This
is it
is a
even doing? I mean, it
it's a
hasn't done much.
very sideways lately.
Yeah. I mean, and their PE is 49, which is yeah, he's being sarcastic. I knew you were being sarcastic, McLaren. I know that. If that was the biggest catalyst in the market, I would have some questions if GameStop moves the market like this. Um Believe it or not, what was crazy to me from a while ago, if you think back to like the 2020, 2021 saga with AMC and GameStop, you can look at there was times where I would see it and people were taking money out of index funds like SPY, VOO, and putting it into the meme stocks. So even though these meme stocks were up in like 2020, 2021, the markets were down overall, which is wild. So something to keep in mind about if you ever get like another meme stock, squeeze again, like we got back in 2021.
Yeah, I don't think it's going to happen with GameStop anytime soon.
No, I don't know what the meme stocks are now. I know Open Door was a meme
Open
stock at one point,
Open's
but
still
they're
it's
actually killing it. Like, look at this thing.
yeah, but we never know if that's going to last forever or not. But I hear you.
Yeah, I mean, so like Open Door is doing really well because of real estate. Rocket Mortgage is doing really well because of real estate. All real estate companies are doing very, very well right now because of rate cuts potential talking into the market, right?
Right, right,
So it's
right.
the rate cut idea now that's like real estate companies are doing very, very well right now because of rate cuts being mentioned for September. So
Yes.
I don't know what. Yeah, Rock. I don't know what the new Roaring Kitty is. If you have any suggestions, maybe I
I
could pump it
know
myself. I don't think I will,
he's
but
he's I know Roaring Kitty is talking about like Unity a lot. That's the U, and that I believe it's been moving up because of that probably. But
oh really?
um, yeah, I mean, I have shares with them, and I play around. Oh, geez, at 44. Well, I'm gonna have trouble with my.
Jesus.
I have shares that I play around with them that I got. Um, it was a cash secure put that got assigned, and I've had it forever, and
Okay.
so I have.
I know that
Yeah,
there was a guy I made on one of my Reddit videos I made. This dude had I want to say like 2 million or something like that into Unity software like a while ago, which is wild. So he's
you
he's
know,
probably loving this.
I think it's that like a lot of people use it in their video game software, so that's the thought process, right? Like I don't know if you how familiar you are with Unity, like
I've
uh,
heard of them, yeah.
yeah,
But they have a negative PE
yeah,
ratio. They're
yeah,
not even
yeah, 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 yeah. I think it's roaring kitty because if you look at yeah, exactly your point. I don't yeah, you know
I just don't. I don't see it. Yeah, their negative earnings per share, estimated earnings per share is still looking at negative.
they're close
Goodness
though.
gracious.
They're close to making money.
Yeah, I think again, if you get that flip to being profitable, I think it'll take off a lot more. I think when it,
Right.
once a stock goes from like a negative earnings per share to a positive one, people love it and they eat it up like
Yes.
it's nothing.
Right. Right.
It's like, oh my god, it's profitable now. Oh my god, oh my god, oh my god, kind of thing, you know.
Yeah. I mean,
Um,
look at the 5-year chart on Unity just to show you. Like, it's like, yeah. So, so
oh my god,
yeah, yeah.
this
So,
thing was trading at $200 and it's down to 40. That's
yeah, yeah,
insanity.
yeah. So,
Oh man, dude. I look at some of these companies. I'm like, dang, dude, imagine that. Like, I mean, like Enphase was like $200, I
it's
think, and
like
now it's down to like
300.
$30. Yeah, or maybe it was 300. Yeah, even that. You know, Block's at 80. It was at like two something in 2020,
Yeah,
2021 or
right.
something like that. You know, like it's all these crazy companies, dude. That's absolutely insane. So yeah, I mean, maybe that's the new meme stock. I don't know. I don't like to try to figure out meme stocks. I can't figure it out for
No
the life of
point.
me. You know, I go on Reddit Wall Street Bets, and then it's like it already happened. So it's kind of like already too late. You know, that's the way I look
There's
at it.
some website called like Ape Wisdom, and they post like the most talked about tickers on Reddit. One of the users in the Discord showed to me. So that might be a way to
Huh.
find some of the next meme stocks. But still, there's like no point in chasing the game because I feel like you're gonna by the time you hop in to ride the up wave, it's gonna be the down wave. You know,
Yeah.
potentially,
Yeah. And
potentially.
then
That's
you're
always
holding
my
the
fear.
bag, and then you're in
Yeah,
trouble, and all that. Yeah.
that's
No
always my
thanks.
thing.
Yep. No, I hear you. So that's it for economic calendar stuff. Again, just watch CPI and PPI this week is my opinion. You
Hmm.
can see what the Atlanta
Hmm.
Fed GDP is for prediction. That's always a really good thing to watch too. But 3% is pretty all right. I don't think there's anything else here. I don't think so, really. Fed balance sheet, 30-year bond auction is important. I never understood that one honestly, the 30-year bond auction, but there's probably something behind it. I have no idea what it is, but that's also I guess important. But and then Michigan consumer sentiment is obviously something to watch, as we know here. So that's it for the economic calendar for you guys for the week
Excellent,
here. So things
excellent.
to watch out for. So big days that you may need to avoid trading. Wednesday, Thursday, maybe even Friday if you were to trade, which leads up into the next thing that we're talking about here, which is the overnight drift trading strategy that me and Ryan have been talking about beforehand. I've talked about
Well,
it before, but now
mostly
as
you.
someone who teaches, yeah, but now I'm teaching every single day of my life, I cannot find time to do it here. So basically, the idea behind the overnight drift trading challenge analysis here, if you guys aren't familiar with it, is basically you look for SPY to have a negative day in the market, which it did, but you do not want to trade Fridays over the weekend because of data that because of any breaking news that can come out on SPY or on the markets. Could be really bad for your options if you buy into it. Basically, you buy an option at close when it's a red day, and you hope for a small profit to sell on the next market open on the green day. So that's kind of the idea behind it, but they don't. But the strategy is to not trade with pre-market data coming out. So, for example, holding an option overnight when you have PPI data coming out the next morning or CPI data coming out the next morning could really mess up your options trading strategy. So that's kind of the idea behind it. You want to trade it when there's good volume. You want to trade it when there's a low VIX. Make sure there's no big earnings coming up as well. So I know GameStop may be impacted a little bit. But there's a lot of things that really do this kind of checklist for trading the overnight drift analysis here. But so far, I'm 4 for 4 on my trading strategies here, and I'm up like 30, 40% overall because it's high quality conviction trades here. So I know Ryan and I were talking about this beforehand, before we started live streaming it, talking about maybe doing it with futures. Right, Ryan, I believe was what we're kind of having a discussion about.
Yeah, either ES or MES, probably ES for liquidity, but it would depend on what the risk is, of course. So, but MES doesn't have as much liquidity as ES. Anyways, continue.
Yeah, so basically, like the idea behind it would be basically like people always talk about this idea of the overnight drift trading strategy is that there's a lot of movement to the upside usually at 2 o'clock in the morning because that's when the Asia markets or the European, I think it's either Asia or Europe that opens up
I think
that
it's
time
Europe.
period.
I think it's Europe.
Europe time, yeah. So basically, the idea behind it is that when you have a red day in the market, market makers, the people that are filling in those orders, are the ones that are holding the shares for losses because someone has to buy the shares you're selling, and so they want to basically like sell off their shares the next available time they can, which would be the European markets. So try to sell them at a little bit of a higher premium. So usually it's called the overnight drift because as long as there's no crazy things that impact the market, they're usually going to be selling these shares of like SPY, for example, for a higher premium at market open on European time, which is like 2 in the morning. So they try to take advantage of that kind of play here because right now they'd be holding shares for a loss. So when the Asia or when the European market opens up, they would sell them off for a higher premium and then make some profit, and that would pump up the share prices for the U.S. market, essentially. I don't know if that makes sense, Ryan. I know that I've been trying to explain it a little bit, but you let me know.
Yeah, I think that makes sense. Sorry, I had to step away for a second, but yeah, I think your explanation makes sense. The people in the chat can confirm or deny that, but I think you're logical there.
Yeah. Yeah, that's gonna happen a lot. Yeah, Rock. It happens actually a lot more than people think. So the sweet spot usually is 2 to 3 in the morning for that reason, when the European market opens. So if you were to trade futures, trading futures at 2 in the morning, Eastern time, at least for me, would be very, very beneficial. For Ryan, it would be 11 p.m.
Well,
Ryan, right?
it depends on fall back or spring forward for Arizona, but yes, currently it would be 11.
Yeah.
Currently it'd be 11. It would be midnight in about a month here for me, though.
Right. Yeah. So it's one of those things where, you take advantage of market moving even before America, even before the US market opens up. And the nice thing is that you buy your option at market close, you sell it at market open the next day, and you don't have to worry about anything else. So it's a very, very interesting strategy to do. I obviously can't do it right now because I'm teaching at 9:30 in the morning when the market opens, so I can't log on and do it. But if you ever do want to look at that kind of trading strategy, it's a very effective one. There's a lot of data behind it. There's an article, there's a book published by the New York Fed that actually breaks down all the data behind it and how much return you would get if you were to trade this overnight challenge a lot more, which is very, very interesting as well to me. So right now, again, like I'm 4 for 4. I think I made like $300-400, and each option costs like $400. So I've almost doubled it basically in that kind of return, which is killer. It works out very, very nicely. Basically, the logic you would want to do though for the options contracts is you'd want to buy like a in the money one, so you get a small move in SPY overnight. All you need is like a 0.02 or 0.03, and you hopefully at least break even, and then kind of go from there. Okay, repeat that. I got you. Ready? So here's the idea. I got this, I think. Oh, on futures, I don't really know about futures as much. That might be Ryan's specialty more or less.
Well,
basically, if you
talk. We'd have to
go
talk.
ahead.
We'd have to talk about it because the timing seems different. That's why I wanted to talk to you about it. But go ahead.
Yeah. So if you can't do futures trading, maybe you don't qualify for it or you don't want to because it's more risky, whatever the case is. If you want to do it without futures, you can do it with SPY ETF. It's the same thing, almost same thing, but it's like similar-ish.
Except you're limited
Except for
in after hour, right? Like that's the reason I was
yeah.
thinking futures might be good because you were saying 2 a.m.'s the ideal time to close it out, right? Or no?
Yeah, 2 to 3 in the morning would be the ideal time to close it out. Yeah, and between 2 and 3 in the morning would be the ideal time to do it.
So that's why I was thinking the options on futures might be good because you could set your limit order and then it would execute around that time instead of having to wait until 9:30 Eastern.
Yep. So basically what the idea would be to open up a contract before 2 or 3 in the morning, essentially on futures. And then you'd be able to close it around 2 to 3 in the morning when you get a pump up there in that case. But if you were not doing futures and you want to look at, what kind of option you'd want to buy. So I can show you on the SPY chart here. I wouldn't have done it on Friday because holding till Monday is a bad idea. We had news break about the war a long time ago that messed with the markets. You never know what's going to happen over the weekend. So we never traded on Friday into Monday. But if you were going to trade options here, you look for a red day in the market, which we had on SPY on Friday. And then you would buy an in the money option. And for me, what I look for is I go a couple days out. Maybe it's 2 days, maybe it's 3 days, whatever the case is. And I look for a pretty good delta of around like 0.74, 0.75 or so. Because this kind of high delta means all you need is a very, very small move in SPY when it opens up. You can close it at market open and make some really, really good money on it. I made like, $100, $200 when it was up like 0.2. It was a 0.2% when the market opened. I made like $100, $200 on it, no problem. So basically, you'd buy a nice in the money option here, cost about $400 or so, and then you would hope to basically when market opens the next day, you would sell it off for a nice profit because you'd be in the money, and the market would hopefully be moving up in your direction, basically. That would be the idea to do it. Again, go a couple days out. I look for what SPY volume is. If it's a low volume day on SPY, it's not as good. You want to have a decent volume day, which this one was a really good day for volume. It was 85 million. The average is 67, so it's a lot of volume, which is good. But holding Friday into Monday is very, very risky, so we don't do that kind of thing for that reason. So that's kind of what it is. The only that sucks, obviously, is that if you buy it at market close, you have to wait till 9:30 the next morning to close your SPY option. If you bought SPY shares, you can do it. You can close it pre-market, but you won't get as good a return. You might get like barely anything. So if you want to get that leverage, you'd buy SPY options and close it at 9:30 the next market day. Essentially, is what you would be doing. If that makes any sense. I don't know, Ryan.
No, that makes sense. That makes sense. I'm just thinking it through. I mean, like you don't even technically have to use options if you wanted to try it. I guess you could just use futures. You could just use like an MES contract and try to do it.
Yeah, you can do it that way. I was also thinking like if I had enough capital, I would do like 3x leverage, like SPY, and so it's like shares. I think it's actually like a. I don't know if that's a thing or not here. S&P 500. I don't know if there's a leverage or not. There's definitely a leveraged ETF for SPY. It's like a 3x one. I don't remember what the ticker symbol is right now, but I can't figure it out right now.
There's
There's a
something.
3x. Yeah.
There's something, but who knows? It's probably like
So if you
U Pro.
yeah, so if
U Pro says rock.
let's see. Yeah, is it U Pro? Let's see. Yes, U Pro. Yep. Leverage. Yep.
Leverage product.
Yep, 3x. So if you really wanted to go crazy with it, you could buy 3x leverage. So that way, if it goes up like 0.1, you get 0.3% return. Still not a crazy amount if you're trading like $500, which is why I do options. But definitely still something you could do if you had a couple thousand to trade this with. You could do it with shares, and that way, if it doesn't work out well, you don't lose as much as you would with an options with like implied volatility, crush, and stuff like that. So definitely not a bad strategy to do in that case as well. So Ryan, I don't know if you have any other kind of thoughts, anything else you want to kind of go over with that. That's kind of like the idea behind the strategy that I've done.
So it's literally just buying a call. You're not doing anything. No spread or anything. Okay. I didn't know what
it's
you.
Very, very simple. Very, very simple. You could trade spreads if you want. You could do like debit spreads if you want to. You could do a debit spread. You could do a bull debit spread if you want to. You could do a bull credit spread if you want to get the premium for it if you want to, and hope that it goes up instead of going against you. You can do that if you want to. I just buy options.
Could probably do an expected move butterfly too if you wanted to.
Yep, I have no idea what that is, but definitely you could.
I could show you.
Okay. Do you have it on your screen? Do you want to show your screen?
Well, I can show it, but you're in the middle of something. You can finish it up.
Oh no, I was just thinking like if you really wanted to, like you could also just like sell like an at the money put and an at the money call, and then just like hopefully get like $27 out of that because it would go up instead of down. You can do like spreads if you want to.
Not a great risk reward there, but yes, I hear what you're saying.
No, you could. It'd probably be better to do like a bull debit spread, probably more or less.
Yeah, you might want to widen it, but yeah, I hear what you're saying there.
Yeah. So those kind of that's all I was really kind of showing in that case. But yeah, so go ahead. What did you want to?
You have to stop screen sharing, but
Got you. On it.
I'll share it, and then you will have to tell me about anything that anyone's saying. That's the bull market strat. Okay.
I call on red day, but yep. Check the VIX data the next day. Yep, exactly. So that's why You look for low VIX on that one. You look for no economic data. Look for no earnings coming out that can impact it. Basically, just hoping that it's like a calm morning in the market, and then it's usually the overnight drift will be pretty successful usually because
You
there's
could
nothing
do
like crazy in the market.
depends on how wide you want to go to, right? But like you could do something to be very wide as the thing. Um,
Mhm.
that'd be $800. I mean, you might want to shorten it up. Maybe you go like, what's the equidistant? Is that equidistant 2020? Yeah, I mean, no, that's 2030. Wait a second. Wait a
That's
second.
all right, dude. Take your time. Take your time. I like that. That shows that chart. That's a pretty cool chart they show. This is futures, right?
This is yeah. If I was to do this in ES, so like this would be a $2.90, 250 to $3 debit, and your max profit potential is fit $1,400, 1,300. So it's like you could, as a lotto, like, hey, for $250, I'm willing to see what happens. Um,
Yeah.
that's an expected move downside, though. That's not what I want to do. We want upside, and
Gotcha.
I'm doing puts. I'm just all messed up. I was thinking about a play for later on. Anyways. Let's just say we do something like this.
Roxanne's going to
So
start trying this with other things in mind. Yeah. Yeah, dude, definitely. It's definitely a strategy where, there's a lot of data behind it. So I'm not just like speaking out my own butt over here. Like I'm actually basing it off of what the New York Fed put a paper out like years ago around the overnight drift and how it works. And it's very, very profitable if you know how to exercise, if you know how to time it right. But the thing is though, and I've said this before on like either live streams or in my videos, is that there's times we might not go, you might have to go 2 weeks without a trade. It's not a trade you do every single day because you need the stars to align. You need a low VIX, you need high volume, you need a red day in the market, you need no major data coming out, you need no earnings coming out. Like the stars really have to align for it to be the most probability of profit for this kind of strategy here. So, you might go 1 or 2 weeks without doing it, but that time you're able to get into it, boom, you hit 20, 30% profit. Like that's killer profit right there. So, that's why, it's not something that you do actively every single day, but it definitely does, when it lines up, it lines up. Like I've done it where I paid $70 on like 400 in like 2 minutes. I was in and out in one day. I was in and out in 2 minutes of my trade and made, like 10, 15, 20% just like that because of the strategy and how it works. So there was a time where like I think it was like 2 weeks ago where there was just so much data coming out Tuesday, Wednesday, Thursday, Friday. I literally was like, I'm not even gonna bother looking at the SPY chart because there's no point. I couldn't trade Tuesday, couldn't trade Wednesday, couldn't trade Thursday, couldn't do Friday, and then Monday we can't really do because Friday into Monday we don't do either. So it really kind of sucks in that case. He says even the next day after red and other things lined up, next 2 days could be choppy because Trump wants to come out and talk. Yeah, it's definitely one of those things where the market with the news coming out is also frustrating. So it's the risk that you do have to take as you're doing this. You got to take a lot of risk on it, and be willing to lose the money and be able to set your stop loss and take profits. That way you don't get like absolutely destroyed by it in this case. But definitely like this trade strategy would have been very, very profitable in the Biden administration because it was like a slow, just do what it's got to
slow
do,
grind up.
nothing crazy, slow grind up. Exactly. Like I think it would have done phenomenal here. With this administration, not so simple, unfortunately. But um, it is what it is for that one.
Well, it's very interesting. But yeah, I
Yeah,
mean, you could.
administration makes a huge difference too.
It's true. It's true. I mean, in some ways, we are getting volatility at least some days. Sometimes, not a lot. Not as much as I thought we were going to get. I'll be honest with you.
Yeah. So what are you doing over here, Ryan? What are you showing?
I
Let
wasn't
me get
showing it.
access.
I was just playing around with like looking at on MES instead of ES, smaller product. Like if I was to do an expected move to the upside, like what would it be? And that's just like, okay, this is like a $75 debit, and I'm
Yeah.
making max profits like 175 if I do it that way. So it's like
Mm,
not bad. Um, little like risk reward to look at. I like if you're going to do a lotto, I kind of like expected move butterflies just because what we're doing here is we're selling the shorts at the end of the expected move. This amber bar is the expected move. So you're hoping to pin the strike price at the end of the expected move here, or the stock price, excuse me.
yeah.
Um, But it would be interesting to think about because you'd have to bracket it, which I can't do right now. But I feel like you'd have to set a like maybe you take this as your max loss as your stop loss, and then you got to set a take profit. I think for overnight because I'm not getting up at
Yeah.
midnight or 11 to mess with that.
Right, and that's kinda like the big problem where it's just like, like if I was to do this trade, I teach at 9:30 in the morning, I would have to log in at like 8:30, give myself an estimation as to where my take profit and stop loss might be, and then set that and just kinda hope that like I don't get absolutely destroyed when market opens.
Right.
So kind of the problem that I'm facing right now. So like if the schools are closed and the markets are open, I really gotta hope that
It's a
I
good
can do
day.
this trade.
It's
But
a good day.
yeah.
I mean, can't you
Yep.
in Webull, can't you um do something with it though for yourself later on?
In terms of like setting stop loss and take profits.
Yeah, can't you do that in Webull and not what's it called?
Yeah,
Robinhood?
I only do it in Webull. I don't do it in Robinhood. I don't do overnight drift in Robinhood. I only do it in Webull.
Gotcha.
So like because it's easy because again, I like how Webull allows you to do the stop loss and take profit like instantaneous. You could say, hey, set my stop loss at this value, set my my take profit at this value. So if at 8:30 in the morning when I'm not teaching, I could set those two up and there's hope that between 8:30 and 9:30 there's nothing crazy and it just kind of hopefully moves up or it comes down and takes out my stop loss, whatever the case is. But it's kind of what
Yeah,
really sucks about it though.
I got you.
So yeah, so that's kind of what the strategy is. If you guys are watching this, either on YouTube or in the Discord or wherever, it's a strategy to look into. There's a paper about it. You can read through all the data behind it. It's backed by science. It's backed by logic. It's backed by numbers. It's not just a bunch of BS that we're throwing out there. It's
Yeah.
definitely an interesting trading strategy to do, especially with futures. If you're able to get up at 2 in the morning, or you live over in Europe or in Asia or in the Middle East or whatever, definitely not a bad strategy to look into because you could really take advantage of the market where a lot of people don't. So
Yeah.
that's kind of what I would like to do, maybe like way, way in the future would be
Yeah,
nice.
to route it. I mean, I feel like you could also just do it maybe the day before and then set a take profit and hopefully it triggers overnight.
Yeah, on futures, yeah.
Yeah, yeah.
Start giving pop quizzes in the morning to check your end out. Dude, so let me tell you this, right?
It's a movie
So
day.
it's a movie, yeah. So they told us that like they're also getting like picky with making sure that like we're not on phones either because we're babysat sometimes at our school. So they said like, hey, if we're making sure that students put their phones away, like your phone's gotta be away too. So I can't pull out my phone in the middle of my class and trade. Unfortunately, I'm not allowed to. So it
I
kind of
mean,
sucks, but
it's good that they're making. I mean, because otherwise the kids are gonna be like, "Well, how come you're on your phone?"
yeah, exactly, yeah. So, because I'm trying to make bank, okay? I'm trying to retire like tomorrow. That's why, all right? You're not trying to retire tomorrow. I'm trying to retire tomorrow. Don't like there's a
Yeah,
difference between me and
exactly.
you, all right, buddy? But yeah, so it kind of sucks in that case, but I mean, it is used the Weeble desktop. Oh my god, could you imagine that? Like my notes, it's like I have my school notes up, and then it's like I just drag over my thing. I'm like, all right, guys, if I make $300 here, I will give all of you A's for the day. If you let me get my profits here for the day, I'll start bribing students that way. But
Yeah, I don't think you want to.
I
I
don't
don't
get
think you
paid
want
enough for
to.
this. Yeah, it's true. I really don't.
There's
But
no
yeah. So like
no teacher does.
over I know, right? But like so like over like like winter break when it's Christmas time, I'll be looking to set it up. Over spring break, same thing. Over summer break, same thing. Um, teach the kids how to invest like School of Rock with money. Yeah, honestly, I would love to do that, but we have to follow our curriculum, which really sucks. So I would have to like take an actual finance class
Hey,
and like get certified in it.
this is a great statistics lesson, dude. You're using probabilities and other statistics to execute a well
Right.
structured trade. I think that it follows your curriculum.
Right. Yeah. No, I mean, definitely. I mean, but they would look at me like I have 5 heads. They would be like, "What are you talking about?" I'm like, "Dude, like, just don't worry about it. All right." I mean,
We
you,
need to be teaching more practical stuff in school, anyways. But I hear you.
I know. Yeah, that's the kind of thing which is why the Fridge Financials brand was made on YouTube for that reason.
There
Was
you
to
go.
to bring education to YouTube and stuff like that, and try to teach whatever I can, So
Yeah.
that's kind of what logic is for that one. But yeah, I mean, so if any of you guys who are watching this, if you make money doing overnight drift, please at me somewhere so that way I can take full credit for it. That'd be awesome. But I'd be curious to know how it works. Obviously, you're not gonna hit every single trade and make all the profits there. But again, like for me, so far in my spreadsheet, I'm 4 for 4 on trades. I haven't missed a trade yet. So which is obviously, and I'm not expecting it to be like that way long term, but being able to hit 4 for 4 means like it's not just a coincidence. It's
Right.
happened for a reason. So I want to keep trying it out and getting more and more data behind it to make my life better, to make that kind of profit, kind of see how it goes. But yeah, it's an interesting strategy. Look into it. There's a Fed article about it. Look into it for sure. People swear by it, and honestly, if I could get between the morning, I would do it. But I'm not getting between the morning and doing it.
I don't blame you.
Yeah. Ryan, did you have any other topics you want to talk about? We kind of covered a little bit of everything. Overnight drift trading, challenge strategy. We talked about IPOs. We talked about, economic data.
Yeah, if there's anyone. Oh, well, Facoctimus was asking you about something and we delayed. Oh, it was your, what was it? You were showing you were doing your synthetic longs. You could talk about that if you wanted to look at that. And he was asking, they were asking,
We do a quick little session on synthetic longs.
Or
Rock
we-
says curriculum sucks, and the students get mad or bored of the teachers when they. Yep. Yeah.
or we can be done early. It's okay either way.
Well, I'll do a quick little. We'll do a quick little. Let me pull it up really quick. I'll show you guys my synthetic longs and how it works here, and then we'll wrap up after that. So basically, the idea behind a synthetic long, for example, let me show you an example of one here. Snapchat. So Snapchat, is down at like $7 or so. So basically, I bought a leap option. I bought a $7 leap option for Snapchat. And the option here, you'll see the option for buying the $7 call option was for $161 in premium upfront. So you would pay $161 for it up front. But then if I sell a put option, same strike, same expiration, it offsets it because I get paid $108 for it. So it creates what's called a synthetic long, where not only do I offset my cost basis, I also offset my break even. And I can show you guys. I'll show you on the option chain here. It's pretty cool actually. So let's say that you're bullish on Snapchat for the longest time. That's $7 a share. I can see it going pretty well long term here. So say you want to buy an in the money call option, right? So you want to buy an in the money call option, delta around 0.8 is pretty good. Usually what I look for my leap options here. So I want to buy the $5 call option for Snapchat, right? Now it costs you $338 or so. And but you do have money, yes, and that's 100% true. Your money is tied up for leap options. But I like leap options because it's gonna let me do its thing. Okay, it gets to do its thing. Can move. Go ahead, Ryan.
Well, and then we can talk about it after. There's another way to structure this trade in a shorter time frame, and you're actually paid to open it. So, but we'll go with your leap method here one first.
Right. So say I'm bullish on Snapchat. I want to buy it in the money call option because that way, every dollar that Snapchat moves, this moves 82 cents. So it moves up a pretty good. It is almost 1-to-1 with Snapchat. It's pretty close to it. But, say you don't have $340 to trade it right now. You don't have the availability for cash right now, for example. So also your break even is $8.40. So we have to move up, 15% between now and September and January of 2027. What you could do is you could also sell a put option at the same strike price of $5, like I do here. And what it's going to do is it's going to reduce your break even and also reduce your cost basis. Okay. So you sell this put option here and your break even goes from 840 now to 761. So instead of a break even profit move of 15%, now it's 5%. So you have a lot less move in the stock, and it also brought down your cost basis from 360 down to, or from 340 or 340 down to 261. So it brings down your cost basis also as a result. Now, people sit there and say, well, Fridge, why would I do that? Because this puts up collateral when you're selling an option. But if you do margin, I'm using Robinhood's margin as collateral. And it's a little more risky.
Charge no
And you're
interest.
charged no interest, right? And so the problem obviously is that yes, using margin can be risky here, but if you're bullish on a Snapchat, I get assigned at a cheaper at a lower share price. I'm fine with it, but I'm using their margin as my collateral to offset my cost basis and to offset my break even. Yes, there's a chance of getting assigned, but again, if you're bullish on the company, you're just buying the shares for a cheaper price. So that's what creates what's called that synthetic long that you're looking at here, where if you go into Snapchat, it basically is almost like you're 1-to-1 with the stock. As the stock moves up, your option moves up and vice versa. So it's very, very cool in that aspect. So again, if you go down to buying the $5 call option, you also sell the $5 put option. It basically mirrors the stock 1-to-1. As it moves, your option goes with it as a result. Now, you could also go even crazier, which is what I also do. You don't have to do this, and I wouldn't recommend doing it unless you're very, very good with managing here. Is that in the meantime, since I'm buying a leap option, you could also sell short term calls against the leap option. And so, what that will look like, which is very, very confusing, say I want to think that Snapchat won't go to $8 between now and October 10th, about a month.
Well,
This sold option here also offsets your cost basis more. And take a look at the returns here. You're making $82 as a max or $92 on max profit in a month, and it costs you $240. So you're looking at
mhm.
almost, a 30% return in about a month because you're selling a covered call, but your leap option is counted as your collateral in case you get exercised early. With poor man's covered calls, though, you never want to be exercised early. So if you're worried about that, you close it for a loss, or you could roll it, or whatever the case
Or
is.
close it all out.
But so what or close it all out, exactly. So I'm rolling. So what you'll notice on my option chain is that I have the synthetic long right here for March, and I also sold a covered call against it for some extra premium on top of it. So it's a
Hey, beats
very,
me.
very interesting strategy because it's basically three options in one. But it's basically you have a cash secured put for cheaper shares. You have a leap option to have that kind of value of buying 100 shares worth. Then you sell covered calls to also offset your profit as well, or offset your cost basis.
And
Um,
yes, and to answer Fakatimus there, you don't need to buy them at the same time. You can wait. You could
right.
buy the long on a red day, and then you could sell the short on a green day to help maximize. Another option with
Yep.
the
So
way.
for go ahead.
No, you go ahead because I was gonna keep talking
Do the
about
other
that, but
side.
slightly
Yeah.
change. So
Okay. Well, so what I was going to say was that, like, just kind of back up what he's saying and then kind of what you're saying. So I did the same thing on SoundHound. I did leap options for January of 2027, and I'm already up 27% on this option. Here's my synthetic long here that I have. And if the market opens up and SoundHound is a little bit green tomorrow, I'll then open a covered call against it because now it's going to have juicier premiums for shorter term. So I'll open up a covered call against this position here to give me a little bit more income as well. So I don't open it all at once like you were saying. I can also go in, and go, 30 days out, sell a call against it, get an extra, $75 or so, as a result of that trade. And if you take a look, if
you
I was to build out my trade now, go ahead while I'm
you
building it. Go ahead and
yeah,
talk
you
while I'm
really you
building
want
it.
to be aware of your break even when you're selling against the long because you want to make sure you're not selling within your
Right.
break even, right?
Right. So my break even is 1451. If I open this up tomorrow, that's my break even of 1451. So as long as I sell it anywhere above 1450, I'll be profitable anyways, no matter what. You
Yes.
know what I mean? Or I'll make a maximum profit as a result. So maybe I want to sell even a $17 one. If it goes up to $17, I make $300. I make literally almost a 100% max profit return in about a month, which is insane. If it goes to $17 a share, then I get $330 estimated profit here, and it cost me $394 to open. So I'm almost 100% return on this trade here by doing a synthetic long leap along with a short-term covered call, if that makes sense. So
Yeah. And then another way to do it too, if you don't want to tie up your collateral, is you can buy the long as a leap, and then you could sell shorter dated puts against it to effectively reduce your cost basis too. It's not
yep.
100 deltas like Fridge was showing, but at least it allows you to be shorter term, tying up that collateral, easier to roll later on, all that stuff, instead of if it's a year or more in advance. You have
and that
you're kind
100
of
delta,
stuck.
that 100 delta is really good,
Yes,
right? Because it's 1-to-1 with
yes,
the
and
stock,
so
basically, right?
yeah, exactly. If you have 100, it's going to dynamically shift, of course. But if you open it with that, then only if it goes in the right direction, it's just going to increase, not decrease. So even better.
Right. And then, so what's your version when you do like the credit instead of a debit?
Yeah, I mean,
I'll build it on here. You tell me how to
yeah,
build it. I'll
you
build it on
build
here
it on
for
this gross, disgusting interface we got here. Let's go to October 17th. Let's just do a shorter term. I personally trade monthlies only. I do not very rarely use weekly expirations. So this is just why I'm picking this. Let's just go with you want to buy a call.
you.
Let's buy the 15
Yeah.
and then sell a put and do the 15 and the sell put. So you're only tying this up for October 17th. Obviously, you got to be very bullish on the stock. You can also do this inverse, although it would require you to cap your upside because it's a naked call, but you're getting paid $75 today for this synthetic position of 100 shares. If you do not want to use the full collateral of $1,500, you can buy, in this instance, a 5 delta put to cap your upside or to cap your downside. So if you buy a cheap put, so buy the 9,
Yeah.
you're going to still get a credit. You're going to tie up only $536 and
Yeah.
actually, you're not gonna. Yeah, well, you're gonna tie up the difference between whatever it is. Yeah. That's what it is. So that's a way to
Yeah.
do it. And then if you wanted to be bearish, you could do the same thing. Sell a 50 delta call, buy a 50 delta put, and then cap your upside with buying a 5 delta call. If you don't want to be naked. Which hey, if you want to have a
Yeah.
naked call, there's nothing wrong with it. But be smart.
Because basically, like, this bought put here is your collateral for this one here, essentially. Is that correct?
Yeah, well, it caps you out, right? Because you're agreeing to buy the shares at 15 and also sell the shares at 9. So it caps your downside to
Right.
that $6 loss, or
Yep.
$600. So 600 minus 63 for the credit is the 536.
Right. The only thing that obviously I'd be aware of also, I think if you're doing something, even if you're doing like what he was saying earlier, what Ryan was saying, with just doing, just one of these ones here, the only thing I'd be mindful of is that if this stock comes down, 5-10%, because SoundHound is a volatile stock, for
Yeah, I wouldn't
example,
do it with SoundHound.
you have a huge risk of getting hit with an early assignment here, because if it comes down 5-10%, they might exercise that contract before expiration. So that's the only thing I'd be mindful of, is that you might get early assignment on this one.
Yeah, well,
So,
that's why I roll at 21 DTE. So you're very less likely to get the early assignment. So then at 21 days to expiration, I'd evaluate. If I haven't taken profit already, I'd be evaluating, what's my profit? Do I want to just close this? Do I want to take the loss, the profit today? Or do I want to roll this out to the next monthly? Which, if you can do
right.
that for a credit, you continue to reduce or help your break evens and
Mm.
stave off early assignment, like for just talking about.
Right. And there's different ways of doing it. Obviously, again, you can, like for me, for example, I don't mind buying options that are leap options. I did the same thing with I think I have Archer Aviation I did it for. I have a synthetic long on Archer Aviation. I bought a $5 call option for January of 2027. I sold the put option. And again, the idea behind it is that it reduces my break even, because if I was just to buy this call option here, my break even would be $10.56. But with me selling the put option that offsets it, my break even comes down to 885. And right now it's at 850. So the fact that it only has to move up, 35 cents to break even between now and January 2027, that's a lot more of a manageable move that you can still have. And you still do have a lot of upside potential. So say Archer Aviation goes to $12 a share, I'm still able to capitalize and make some very good profit overall long term, because I still have that in the money call option that becomes more profitable as Archer moves up a lot higher. And if I get worried about it, I can always roll down my put option to a $5 strike or to a $4 strike if I want to get in for cheaper. But again, if you're bullish on a company, these aren't a bad play to do. And again, now what I can do is, if Archer Aviation opens up green tomorrow, I can then go into the options chain and go, say 30 days out, like Ryan does, 30-day monthlies. Maybe it might be I go to the 17th. I could also sell, a $10 call option to get an extra $30 to offset it. Getting $33 extra as an offset for my profit. It's very, very nice to do. There's different ways of doing it, but basically it's a poor man's cover call, but a synthetic poor man's cover call because you have the cash put built in as well. So for example, if I really wanted to, if I bought the $7 call option here, I sold the $7 put option here. Then you want to go to say October 17th, like Ryan was saying, for doing his options, doing the monthlies. You sell a $10 call option here. Your max profit here is looking at $186, and it costs you one. You're making over 100% if Archer goes to $10, which is not unheard of. Archer has gone to $10 and $11 before. You can still make over 100% return as a result of this trade.
Mm-hmm.
And you're using $700 in Robinhood's margin as your collateral. So very, very interesting strategy to do. And again, as you know, Arch Aviation has gone to $10, has gone to $11. It has gone up to, this $11, $12 here. Yes, it caps their upside, but if you make 100% return in a month, nobody's going to complain about that. I wouldn't. I don't know about you guys, but I wouldn't personally.
I mean, I'd be bummed out from money on the table, but yes, it's a winning trade no matter what.
Do right. Glam Drink, yes, you do need margin to do a cover call or a poor man's cover call because you are.
What?
I think you do.
Oh, level 3 options. Yeah, level 3 options. You have to be on margin.
Yeah.
You're correct.
Because they're reading it as you're selling a naked call option, even though you have your leap option as your collateral. They're reading it as you are selling a naked option. So you do need margin. Fun fact.
They read it as a naked call? What?
Yeah, they read it. Well, yeah, you can't do poor man's cover calls unless you have level 3 options because they're gonna say it because what Robinhood does, which I know people
This
say,
has happened to my dad before, but go ahead.
They won't automatically exercise your leap option.
They will not
as collateral. You have to do it yourself. So
I'm sure if you told them they would do it like the day of, and I'm sure if you messaged support and said, "Hey, exercise this shit for me." But yeah, my dad had this happen where he had a poor man's cover call in GM, and he was like, I'm gonna let my short expire, and it's just gonna sell the long against it. And they didn't do that. Nope. They bought shares for him and sold the short call on it, and he incurred a loss when he was like, well, I would have had a gain. So
yeah, and so it's one of those things where it's just like, like they might, it's poor man's cover calls have very much risk to it because, so for example, if I get exercised on, I don't even know, I don't have one that's like super expensive, but if I had one that was like $5,000 for shares, I don't have the cash for it. I could be at risk for margin call based on my buying power right now. I would be at risk for a margin call. So that's why you got to close it or roll before expiration so you can avoid risk of early assignment. Okay. So, for example, like my Toll Brothers one, I'm doing a poor man's cover call on Toll right now. It was at a 145 strike, but right now Toll Brothers at like 147. It would have expired in like a week. And I was at risk of maybe getting hit with some kind of assignment, so I just kind of rolled it out further, especially with the interest rate cuts on the table. I rolled mine to 160 out now till December. If it goes to 160, this call option is going to be worth so much money. Like I can just close this one and then just close that and make a lot of profit. So it's definitely something to keep in mind about that. You have to be mindful because if I get this exercised early, I need 16 grand and I don't have that. So I could be at risk for margin call. So you got to manage poor man's cover calls really carefully, and that's why you need margin for it. So hopefully that makes sense. But
you could also do long-term zebras instead of like a leap style zebra.
Yeah, I believe it or not, I watched a video about that the other day actually, and I was like, I understand this and why it works that way now. It's actually pretty cool.
Yeah, I did it with ONS actually. And I alerted it. Yeah, it was like for $370. I'm 100 long for a year or for like I don't remember how long. I mean, we could structure it to show people, but
yeah. So I did see that. So yeah, there's a lot of really cool things you can obviously do with these positions here. But again, poor cover calls, any kind of options, you need to be managing it carefully and watching the strike prices.
Yeah, and I think Fridge saying you got to be careful about margin. You got to be very smart, of course, but part of trading trading in general is using your variable leverage. I mean, you got to be smart, of course. Don't be stupid with it, but you want to use your buying power to your advantage. It's going to help you grow, but you got to be very smart about it. Like you look at Fridge. If you pull down your little drop down there on buying power, there, Fridge. He's using about 50% of his buying power right now. He probably won't want to use much more, but he probably has other money somewhere else.
Yep.
I know it says low risk at 7%. I'm doing 335 divided by 700. That's your margin total.
Yeah. Yep.
Sorry, 7,000, not 700.
No, I like that they do like this breakdown. So it's like hey, you're at a low risk of margin call. I'm not touching anything else. I might close some positions out and then bump this percent up a little bit, but rather than that, I'm not touching anything else right now. If anything, I'm gonna just kind of tomorrow morning I might sell a call option against Soundhound that'll actually boost up my margin.
Yeah, it will help your cash.
My cash for that reason. So so it definitely really helps me out here in this case, but. Taking a look at some of these options here, I did my Chipotle one for before their earnings, so that way I can get another earnings play, maybe after earnings or before earnings, maybe take advantage of that one as well. But selling options to kind of bring up my margin is really good. But I have so many positions right now, I don't want to touch anything else. I'm in a good spot. I got Soundhound, Archer Aviation, ONDS is a bought leap option I'm totally cool doing. But this one can be another one I could sell covered calls against. Because I have the shares worth of it. So it costed me 320. I'm already up $15. Now I can start saying, okay, let me just start selling some covered calls against it for short term. You can make some really good money here. If I sold even a 750, it makes an extra $43. That'll bump up my margin use as well, which would be nice. So a lot of things you can do with it for sure. So, it's all a numbers game. Like you said, you leveraging out with margin definitely really helps you guys out, as but you have to be very mindful of it. There's good ways to use margin. There's bad ways to use margin. Buying options on margin, not a good idea in my opinion. I've never really liked doing that.
Don't do that.
I've liked options with margin because then I can just get shares if I get assigned, and I can sell covered calls against it. Trying to go the passive route for margin is how you can get that leverage option. You got nothing, and now you got to pay interest on what you borrowed. So it kind of sucks.
Yes, you don't want to. Avoiding the interest is best. But at least if you got the shares assigned, you could just sell them for a loss and get rid of the interest if you were concerned.
Yeah, or what you could do is, the margin rate right now is it's 5.75%, I think, on margin borrow for me. And so if I sold a covered call that took that much, if I borrowed, $500 and I made 10% on it, that will pay my interest and then some, so you can use covered calls. You can use covered calls to kind of pay your interest down also, which is really, really nice, and pay off your margin that way if you wanted to. So a lot of ways you can do it. But yeah, I think we are all set to wrap up here, Ryan. What do you think?
Yeah, I think we're
long. Just me and you.
Yeah, we did great. We did great.
Yeah, for sure. Guys, if you're watching on YouTube, thank you guys so much for watching. Obviously, if you're on Discord, thank you guys for tuning on your Sunday evening here. Hopefully, we gave you a little bit of insight here. It was just me and Ryan holding it down, so hopefully, we did the kingdom proud here for you guys.
Yes.
So we did a good time with it. We could talk strategies for hours, but I need to get to bed soon at some point, and I gotta eat some dinner first. So that's why I'm going to cut it off here. For the night here. But hopefully we're back next week with a bigger roundtable discussion here. Ryan, as always, I appreciate you joining. Anything you want to say to the people before we get off for the night?
No, have a good Sunday night. Things are opening on Monday. I'd still be going small as always and just be smart,
Yeah, absolutely, man. So guys, thank you guys obviously so much for tuning into your Sunday evening session. It's Fridge Financials and Ryan here to help it out, and hopefully we'll see you guys next week in the Discord. And again, any questions, shoot us some questions. Anything it is you need from us, you let us know as always. Thank you guys so much. Take care, and bye-bye.
Yes, thank you.